My son-in-law was carving a roast at our kitchen table when I asked him about the $64,000 wire to a title company. The knife stopped halfway through the meat. My daughter Rachel looked at me. What title company? Evan kept his eyes on the cutting board. It was connected to the restaurant. Then show us the restaurant statement, I said. My wife Susan reached under the table and grabbed my wrist. Mark, not now. I moved my hand away. Now is 6 weeks late. Rachel looked from me to her mother. What is he talking about? Susan's face had already answered. Evan placed the knife beside the roast. Your parents helped with a temporary cash shortage. How much? Rachel asked. Nobody answered. She asked again. This time I told her. $185,000. Rachel stared at her husband. Then she turned to Susan. Mom, you told me you loaned us $38,000 for the broken cooler. That was the first lie that collapsed. The second one took another bank statement. And by the time we found the third, Evan was no longer trying to save the restaurant. He was trying to leave my daughter with the debt while he moved into a home she had never seen. I'm Mark Bennett. I was 62 when this happened, 11 months away from retirement, and convinced I knew my own family. Susan and I had been married 34 years. We were not wealthy, but we had done most things right. The mortgage was nearly finished. We drove our cars until the repair bills became embarrassing. We saved before we spent. Our joint retirement savings included a bridge account with $243,000. It was supposed to cover the period between my last paycheck and the start of my full retirement benefits. It was also supposed to buy a used travel trailer. Susan wanted to see Glacier National Park. I wanted one summer in which a storm did not send me back to work. Then, during a routine meeting, our financial advisor asked why we had withdrawn most of the account. I thought he had the wrong couple. He turned his monitor toward me. 2 transfers, $60,000 on January 12th, $125,000 on January 26th. The remaining balance was just under $58,000. Did your wife make these? He asked. I did not answer because I already knew. Susan handled that account. Both our names were on it, and either of us could move the money. We had never needed a rule requiring permission because, until then, we had never needed protection from each other. I drove home with the printed statement on the passenger seat. Susan was in the laundry room when I walked in. I placed the page on top of the dryer. Tell me this is a mistake. She looked at the numbers and sat down on a basket of towels. I was going to tell you. When? When they were safe. Who is they? She looked at me as though I should already understand. Rachel and Evan. Our daughter and son-in-law owned a restaurant called Maple and Stone. It was 5 years old, popular on weekends, and never as profitable as the full parking lot made it appear. Rachel ran the dining room and staff. Evan controlled the books. Susan said the restaurant had fallen behind on taxes, vendors, and payroll. Evan had called her in January and said they might be locked out within days. Why didn't Rachel call us? I asked. She didn't know how bad it was. She owns half the business. Evan was trying to protect her. That sentence bothered me more than the amount. He asked you to hide it from his wife. Noah had been sick. Rachel was already overwhelmed. Noah was our 5-year-old grandson. He had spent one night in the hospital with a respiratory infection and recovered. It had frightened all of us, but it did not explain hiding a 6-figure crisis from his mother. What proof did Evan show you? Susan opened her email. There was a tax notice, 2 vendor invoices, and an estimate to replace the restaurant's walk-in cooler. The cooler estimate was $37,800. There was also a loan agreement prepared by Evan. Susan had signed it. I read the borrower's name twice. M&S Hospitality, LLC. Is that the restaurant? I asked. Of course. The restaurant is Maple and Stone Dining, LLC. She took the phone from me and looked again. The 2 names were close enough to feel familiar and different enough to matter. Maybe it's their holding company. Maybe. Who owns it? She did not know. Did you speak to Rachel before sending the money? Evan asked me not to scare her. That isn't what I asked. No. I walked into the kitchen because I needed distance before I said something permanent. Susan followed me. I did it for our daughter. You did it without our daughter. If I had waited, 20 people could have lost their jobs. And if he lied, he is Noah's father. That is not an answer. She began crying. I did not raise my voice. I also did not comfort her. The money mattered, but the secrecy was worse. Susan had not made a bad investment after a conversation. She had decided that my disagreement would be an obstacle and removed me from the decision. Call Evan, I said. He answered immediately. When Susan told him I had seen the account, he went silent for 2 seconds. Then he became helpful. He explained that M&S Hospitality handled special obligations for the restaurant. He said the 2 companies shared expenses and that moving money between them was normal. Send me the bank statement, I said. I can send you a use of funds report. A statement. There are employee names and private vendor arrangements. Black them out. Mark, restaurant accounting is not as simple as a household checking account. Money enters, money leaves. Start there. He promised documents the next morning. At 10:15, I received a spreadsheet. It accounted for exactly $185,000 in 4 clean categories: taxes, equipment, suppliers, and payroll. No bank statement. 1 invoice immediately stood out. The cooler company had billed $37,800. Evan's spreadsheet claimed he paid $52,000 for refrigeration. The final page of the same attachment showed what actually happened. The restaurant had rejected the replacement and approved a compressor repair for $18,600. Evan had included the proof that contradicted his own spreadsheet, probably because he assumed Susan would never read past the first page. Then I called Rachel. How is the restaurant? I asked. Busy. Why? Any unpaid staff? No. Tax problems? There was a pause. We had a late filing. Evan handled it. How much did your mother loan you? $38,000 for the cooler. The answer came too quickly to be a misunderstanding. Come to the house after lunch, I said. Dad, what happened? I need you to see something before somebody explains it for you. Rachel arrived alone. Susan and I were waiting at the kitchen table. I gave her the transfer statement and the loan agreement. She read the amount, then looked at her mother. You sent him all of this? Susan nodded. Why didn't you call me? He said you were barely sleeping. So you gave my husband our future without asking me? I thought I was saving your restaurant. Rachel pushed back from the table. M&S Hospitality is not the restaurant. That ended the last hopeful explanation. Evan had created M&S Hospitality 3 years earlier for consulting work. Rachel had never owned any part of it. Can you see its account? I asked. No, it's his company. Can you see the restaurant accounts? Yes. She opened her laptop. There was no incoming transfer for $60,000, no transfer for $125,000. Only one payment from M&S Hospitality appeared in the restaurant's records. $38,400. It had paid the cooler repair, a tax balance, and one late produce invoice. The remaining $146,600 had never entered the restaurant. Rachel called Evan from our kitchen. "Where is the rest of my parents' money?" He asked whether she was with us. "Answer me." "I moved it through the company reserve." "What reserve?" "We should talk at home. Bring the M&S hospitality statements. Those aren't your business records." "Then why did my mother's money go there?" He ended the call. That was the first moment Rachel stopped defending him. Not because I convinced her, because he refused to answer a question that had only one honest answer. Rachel contacted a lawyer that afternoon. The lawyer told her not to empty accounts, take Evan's computer, or make public accusations. She did 3 practical things instead. She changed the restaurant banking so any large transfer required both owners. She downloaded the records she already had a right to access, and she asked Evan in writing for a complete accounting of the family loan. He responded with another summary. This one was 11 pages long. It contained charts, projected sales, and explanations of why restaurants needed flexible capital. It still did not contain the statement. 2 days later, Evan asked all of us to come to dinner at our house. He said the family needed to stop turning a temporary problem into a permanent fracture. He arrived carrying a roast, a bottle of wine, and a folder. For the first 20 minutes, he acted as though we were negotiating a misunderstanding. He admitted the restaurant had used only part of the money. He said the rest had been invested through M&S Hospitality to create a second income stream for Rachel and Noah. "What investment?" Rachel asked. "A property opportunity." "What property?" He opened the folder and removed a glossy page showing a new condominium development north of Columbus. "A 2-bedroom unit," he said. "Pre-construction pricing, strong rental demand." Susan looked relieved. "So the money is in a property?" Evan nodded. "That was when I asked about the $64,000 wire to the title company." He had not told us the amount, but I had seen it listed on one page he accidentally included in the folder. His knife stopped above the roast. Rachel asked who would own the condo. M&S Hospitality. "Your company. It would benefit our family." "Then show me the purchase agreement." He slid the glossy page toward her. "That is an advertisement," she said. "Show me the contract." He did not have it. "Show us the bank statement," I said. He looked directly at me. "You are not entitled to my company's private records." "Then your company was not entitled to our retirement money." Susan took the loan agreement from the table. For the first time, she spoke to him without defending what she had done. "I loaned this money because you said Rachel's restaurant would close. The businesses support each other. You said employees would miss payroll. They would have. They didn't receive this money." Evan looked at Rachel. "Your parents are making this sound criminal." "No," she said. "You're making it sound complicated." Then she repeated my question. "Show us the statement." He closed the folder, stood, and left without taking the roast. The next morning, Susan hired her own attorney. That detail mattered. I did not hire someone to attack Evan on her behalf. The agreement carried her signature. The deception had been aimed at her. She needed to decide whether she was ready to admit that. She was. Before she reached the attorney's office, Evan tried one more time to control the paper trail. At 7:12 that morning, Susan received an email titled, "Updated Family Loan. Signature Needed." The message sounded harmless. Evan wrote that his accountant had noticed unclear wording in the original agreement and wanted the family records corrected before tax season. The first agreement said the money was for emergency operating expenses connected to Maple and Stone. The new one called it a general investment in M&S Hospitality. It also allowed Evan to place the money in real estate, consulting projects, or any other opportunity he considered beneficial. At the bottom was an electronic signature button. "He wants me to approve the condo after the fact," Susan said. "Forward it to your attorney," I told her. "Should I reply?" "Ask her." Susan did exactly that. Her attorney told her not to sign and to preserve both versions. Evan called 20 minutes later. Susan put the phone on speaker. "The updated note is just bookkeeping," he said. "Why does it change what the money was for?" she asked. "It clarifies what we discussed." "We discussed payroll, taxes, and the cooler." "We discussed protecting the family." "No. You discussed Rachel losing her restaurant." He went quiet. Then he tried a different pressure point. "If this becomes a legal fight, Noah will hear about it eventually." Susan's hand tightened around the phone. "Do not use my grandson to make me sign another document." She ended the call. It was the first firm decision she had made since sending the money. That email did not magically decide the case, but it made Evan's position much harder. He was not merely defending an old misunderstanding. He was trying to rewrite the agreement after we asked where the money went. Her attorney sent a formal demand for records and repayment under the loan agreement. Rachel's attorney requested financial disclosures connected to the business and the marriage. 9 days later, we finally received the statement. It was 6 pages long, and the condo was only part of the story. The statement showed every dollar. $38,400 had gone to Maple and Stone. $64,000 had gone to the title company. $42,600 had paid Evan's personal credit cards. $25,000 had paid a furniture store, a moving company, condo insurance, and association fees. $15,000 remained in the account. The numbers were bad. The dates were worse. Evan had created M&S Hospitality 6 weeks before he called Susan about the restaurant emergency. He signed the condo contract 4 days before the first transfer. In other words, he did not receive our money and then discover an investment. He found a property, needed money, and then created an emergency large enough to make Susan send it. Rachel sat beside me in the attorney's conference room, reading the purchase application. The named buyer was Evan Mercer personally, not M&S Hospitality and not the restaurant. The unit was not described as a rental. Under intended use, Evan had checked owner occupied. Under expected move-in date, he had written June 15th. Rachel whispered the date. It was 2 weeks after Noah's preschool year ended. There was one more payment hidden among the credit card records, $4,500 to a family law firm. The charge had been made 3 weeks before Evan asked Susan for the first $60,000. Rachel closed the file. He was planning the divorce before he asked for the money. Nobody corrected her. Susan stood and walked out of the conference room. I found her in the hallway, pressing both hands against her face. "He used me," she said. I wish I could say I answered gently. I didn't. "He could only use what you hid." She lowered her hands. The sentence was cruel, but it was true. I had been carrying it for weeks. I know, she said. That stopped me. No defense, no reminder that she loved Rachel, no claim that I would have refused. Just 2 words, I know. Rachel asked Evan to meet her at the restaurant before opening the next morning. She allowed Susan and me to sit in a back booth, but she did the talking. Evan arrived without a lawyer. He looked tired but controlled. Rachel placed 3 documents in front of him: the condo application, the credit card payment to the law firm, and the bank statement. "Were you leaving me?" she asked. He did not insult us by denying it. "I was preparing in case we separated." "You chose a move-in date." "Because the builder required one." "You hired a divorce attorney." "For information." "You took my parents' money." "Your mother signed a loan." Susan flinched. Rachel tapped the agreement. "Because you told her it would save my restaurant." "Part of it did." 21%. He looked at me. "Did you calculate that for her?" The calculator did. His control slipped. "You have wanted me out of this family since the restaurant opened. I gave you $40,000 to open it. And reminded us every time you fixed a shelf." Rachel raised her hand. "Stop making this about Dad." Evan leaned toward her. "Your parents were earning almost nothing on that account. The condo would have held value. The restaurant needed cash. I put the money where it could help all of us. While you moved into it alone, I didn't know what would happen with us. You made sure I didn't know either." For a moment, neither of them spoke. Then Rachel asked the question I had been afraid she would avoid. "Do you still want this marriage?" Evan looked down at the documents. "Not like this." Rachel nodded once. "Then we're done discussing the marriage. Now we discuss the money." That was the moment the balance of the room changed. Until then, Evan had treated every question as an emotional reaction he could outlast. Rachel stopped asking him to explain himself. She gave him 2 written options prepared by the attorneys. The condo contract still had a financing contingency period. Evan could cancel the purchase, return the deposit to the account, and preserve the disputed funds while the rest was resolved. Or Susan could ask a court to restrict the account and pursue repayment under the loan agreement. Nobody promised she would win quickly. A lawsuit could take months and cost thousands. But it would place every transfer, credit card payment, and company record into formal discovery. Evan understood that better than anyone. "You're threatening to freeze my company," he said. Susan answered him. "You used my money to fund it." "I was going to repay you." "Then start now." He had 48 hours before the condo deadline. At hour 39, Harbor Ridge confirmed the purchase had been canceled. The $64,000 deposit returned to M&S Hospitality several days later. Susan's attorney required it to be transferred immediately into a neutral account while the larger dispute was settled. The $15,000 that had never been spent went with it. $79,000 was safe. That still left $106,000. The furniture company accepted most of the unopened order, minus delivery and restocking charges. The moving reservation was partly refundable. That recovered another $21,000. The $42,600 used on Evan's credit cards was gone. So was the money that had legitimately entered the restaurant. Evan did not suddenly produce a suitcase full of cash. There was no judge who solved everything in one afternoon. He had a mortgaged house, a financed truck, a retirement account, and half of a restaurant that earned money but carried debt. Those assets had to be valued during the separation. The next 4 months were exhausting. Rachel and Evan lived in separate rooms while their attorneys built a temporary parenting schedule. They did not use Noah to deliver messages. That was one decision they both got right. At Maple and Stone, every payment above $5,000 required 2 approvals. The bookkeeper sent identical reports to both owners. Vendors were told only that management responsibilities had changed. The staff knew something was wrong, but the restaurant stayed open. Susan and I had our own problem to solve. The first counseling session lasted 50 minutes. Susan spent 30 of them explaining why she had believed Evan. On the drive home, I told her the explanation was not helping. "You keep describing his lie," I said. "I need to understand your decision." She stared through the windshield. "I knew you would ask for records." "Yes. And I was afraid that while we waited, Rachel would lose the restaurant." "So you decided my questions were the danger." "Yes." "Did you believe I cared less about her than you did?" She took a long time to answer. "For those 2 days, I think I did." That hurt more than the missing money. But it was finally honest. Susan had wanted to be the person who saved our daughter. Evan gave her a crisis, a deadline, and a secret. She accepted all 3 because asking me would have meant surrendering the role of rescuer. Understanding that did not excuse it. It did give us something real to repair. We changed the joint accounts so large transfers required both signatures. Susan gave me every email and message Evan had sent. I did not demand access to her personal phone. Surveillance is not trust. For several weeks we slept in separate rooms. We ate dinner together. We attended counseling. Some nights we spoke normally. Other nights the sound of the washing machine reminded me of the statement on the dryer, and I could not look at her. That is what financial betrayal does. The amount appears on one page. The damage appears in ordinary moments. The restaurant valuation arrived in May. It exposed one final manipulation. Evan had claimed that all $185,000 was restaurant debt, even though the restaurant had received only $38,400. On paper, that made Maple and Stone look nearly worthless. 2 months before asking Susan for money, he had requested an estimate for buying Rachel's half. Using the false debt, the estimate valued her share at $27,000. With the false debt removed, her share was worth more than 3 times that amount. The condo was not his entire exit plan. He intended to move out, tell Rachel the restaurant had no value, and offer her a small check to walk away from the business she had spent 5 years building. Our retirement money would have paid his personal debts, funded his new home, and helped him buy my daughter's restaurant at a discount. That discovery ended any chance of reconciliation between them. It also gave Rachel leverage. Evan could argue about his intentions. He could not explain why a personal loan to his separate company appeared as debt on the restaurant valuation. Their settlement was not dramatic. It was practical. Rachel kept Maple and Stone and refinanced part of the business to purchase Evan's legitimate interest over 5 years. The value was adjusted for the money he had taken and the false debt he had placed on the books. Evan received his share of the equity when their house was sold. Before that money reached him, $46,600 went toward what he personally still owed Susan, including the non-refundable condo expenses. The restaurant accepted responsibility for the $38,400 it had actually used. Rachel signed a new note with monthly payments and no hidden companies. By the end of the settlement, Susan and I had recovered $146,600. The remaining $38,400 would return over 3 years. We did not recover the attorney fees. We did not recover the furniture restocking charges. And I did not retire that fall. I worked another 14 months. That is the part a less honest story would remove. We exposed the truth, but the truth did not erase the cost. Rachel's first 6 months running Maple and Stone alone were difficult. Evan had understood the finances, and losing him created real work. She hired an outside bookkeeper, promoted her kitchen manager, and started receiving the same bank alert on 2 devices. The restaurant survived because it had never been the disaster Evan described. He had taken a manageable $38,000 problem and wrapped it in a $185,000 lie. Susan apologized to Rachel in the empty restaurant one morning before opening. I was not there, but Rachel later told me what she said. "I believed your husband because he gave me a way to feel useful. I should have trusted you enough to ask." Rachel did not answer immediately. Then she said, "I need my mother. I don't need another person managing what I'm allowed to know." They rebuilt from there. Evan and I spoke only when necessary. One afternoon, several months after the settlement, he met me in the restaurant parking lot during a pickup for Noah. "You turned all of them against me," he said. "I asked for a statement. You knew what would happen." "No, that was the problem. None of us knew what happened." He looked toward the front windows. Rachel was inside helping Noah put on his coat. "I was going to make the money back." "Maybe." "Then why couldn't you wait?" "Because it was not your money, your decision, or your future to hide." He did not apologize. I did not expect him to. The most important consequence was not that he lost the condo or his control of the restaurant. It was that the people he had kept separate finally compared what he told them. He told Susan the restaurant was days from closing. He told Rachel her parents had covered only the cooler. He told me the money was protected by complicated business arrangements. Every story worked until we sat at the same table. Susan and I eventually bought the travel trailer, not the one we originally wanted. We found a used model with a faded stripe and a cabinet that opened whenever we turned left. The following summer, we drove to Montana. Our marriage was still not what it had been before the transfer. In some ways, it was more careful. Susan no longer hid difficult news until she had a solution. I no longer treated silence as proof that everything was fine. Trust did not return because the money returned. It returned one small decision at a time. As for the restaurant loan, Rachel's payment arrived on the first business day of every month. Each transfer carried the same note, for Mom and Dad. I never asked her to write it. The original agreement is still locked in our home safe, not because I expect to need it, because it reminds me how easily the word family can be placed on top of a decision nobody in the family was allowed to make. Evan believed the amount was too large for Susan to admit she had sent it. He believed Rachel was too busy to examine the books, and he believed I would stay quiet to protect the restaurant. He was almost right. All I did was ask him for one bank statement. The statement did the rest. So tell me honestly, if your spouse secretly gave most of your retirement savings to your son-in-law because she believed she was saving your daughter, could you forgive her? And if exposing the truth might end your daughter's marriage, would you still demand the records? I know what I chose. What would you have done?